If you have a high cash value whole life policy and you're building cash value, you can take a policy loan for whatever you want, up to 95% of the total cash value. The insurance company is not doing a credit check. They're not questioning you what you need the money for. And they usually have that loan to you within 3 to 5 business days. When you take that loan, Steve, they don't physically remove the money from your cash value. They put a lien against it. So if you've got $150,000 in cash, you take a $100,000 loan, you're still earning interest and dividends on the total 150. Now we're going to look at an example here in a minute, but that's the main purpose of why we want people to understand policy loans is that you're making money in two places at the same time. So you could take a loan to invest in real estate or crypto or a business, make money there, and you're still making money on your total cash value in the policy.
Yeah, the other day I was talking to my son who's 21. I was talking to him about money momentum. And it's funny, a lot of the young guys, they get a little hostile toward, quote, the system, right? And we know the system creates a lot of hardships if you're talking about conventional advice. And so what I was talking to him about was just the momentum aspect of money and how you need to start funding things that build momentum that are tools for doing that. And that will get you ahead of the curve and help you make more decisions concerning your own wealth. And so this is a great example of it, Barry, the policy loan, understanding that if you build up this safe capital that's always working, you're going to be getting momentum. And then if you need something, you can take a policy loan without disturbing that, which I was sharing with him and I tell a lot of people this, that it's a very powerful concept if people can undergo the mental shift in order to understand it.
Yeah, absolutely. Let's look at some real numbers. So this is one of our top mutual insurance companies. And just right off the bat, we're going to show the illustration being designed here. This is a 50,000 annual premium, but in year one, this person also wanted to add an additional $100,000 lump sum. So that's why you see the 150 and then $50,000 thereafter. Well, in year three, there's $252,000 of cash value. Let's say they want to take a $200,000 loan for a real estate deal. It's a down payment. Maybe they're going to buy a smaller property outright and then do a refinance or whatever the case might be. But $200,000 is the loan amount. The cash value is unaffected whether you have a policy loan or not. And that's what I want to show here. So in part two, this is the illustration showing the loan, showing a payback over 5 years. It's about a 45,000 a year payback. And then when we get to year 10, this is what I want to highlight. Even though this loan was out for 5 years, Steve, the cash value in part two showing the loan is 749,697. Well, going back to the original illustration, look at the year 10 cash value. It's the exact same 749,697. Why? Because policy loans don't affect the cash value growth. You're still earning interest and dividends on your total cash value. There's one caveat to this. We use companies that are both direct recognition and non-direct recognition. Both companies allow you to earn interest and dividends on your total cash value, even though you have a loan. However, the caveat is this. If you're with the direct recognition company, you're going to earn a little bit less of the dividend, but only on that loaned money. It's just under 1% less. So to be clear, you still make money on total cash value, whether you have a direct recognition company or a non-direct recognition company. What I love to show here, 10 years out, 11 years out, 15 years out, it doesn't matter. The cash value is exactly the same as the original illustration. So use policy loans to your advantage. We recommend if you've got real estate deals coming up, business deals coming up, investments that you want to make coming up, run the money first through a policy because now you're making money in two places at the same time.
Hmm. Can't beat that. And again, momentum is the key. on it. This is something that banks do with your money, just as an aside. And so love talking about this issue. Love talking about this opportunity, I should say, and this example. Very appreciate you sharing it. Thank you all for joining us today. Hope this is helpful. See you in the next video.